Alrighty, so I'm going to go over the trade that I posted on Twitter this morning. I got a few comments in, especially y'all in the Discord, wanting a little bit deeper of an explanation about this because it was pretty nice. There was quite a few confluences that aligned with each other. It was more so just kind of like a right time at the, I want to say right time at the right place, but like stuff that doesn't line up all the time for it to happen here is exactly what happened. So immediately getting into it, I'm going to go over the entry first, right? And then I did have a couple questions. People had a couple questions about standard deviations and the best way to go about them and how to draw them, right? So initially, right? So actually, I feel like I kind of need to give a top down because it wouldn't make sense to do first, right? So we get 830. Where's 830? Okay, we get this manipulation up. I want to say manipulation, but we get this nice move up, aka kind of like a Judas swing, right? And then we immediately just start dumping. I think we moved. Granted, I'm on a 10-second chart here, but we moved 117.25 points, right? And usually after a strong expansion, either what's going to happen is price is going to consolidate or we're going to see a possible retracement / reversal, right? And this is where standard deviation projections come in personally for me, right? I know at the -1, -1.5, there's a possible chance of a small reversal, but the bigger reversals are going to happen at the -2 through -2.5, and ultimately like the -4 is going to be one of the big ones where you'll see price get a good reaction and probably return to about 50% of the range, right? Now, I do want to say this is not needed. You like these kind of moves you don't have to catch, if I'm being brutally honest. It's just like nice when you have like a deeper understanding of them and you see them present. It's just better and more confirmation, right? But besides the point, right? Something I talked about in the last video was 1 minute sweep, 10-second CSS, entry on 10-second CSS, right? Obviously, you need to be aligned with structure. If you're not aligned with structure, you're kind of shooting yourself in the foot. And now the funny thing is I'm kind of saying that here because this is technically quote unquote against structure because ultimately we flip bearish. But when you know what you're looking for, you can kind of play those moves back in. You just have to have really strong discipline and not get too antsy trying to pick a bottom. You know what I mean? And you got to wait. Like I'm telling you right now, if I did not have these standard deviations plotted, I probably would not have taken this. Being fully transparent right there, right? So initially, I've recently added 12 minute in. Big fan of it. It honestly provides some clarity, and I'll go over a couple reasons why. But specifically for this trade, right? Got to get in the trade, not just me rambling and talking, but we had a bunch of accumulation right over here, right? And we know, and as Dave says, price is attracted to volume and consolidation is volume, right? So we want to be basing stuff off of areas where there is quite a bit of volume. We don't want to just be playing in the middle of a completely balanced price range, right? Where we just go straight up and we go straight down, right? You want some inefficiency and some pending, I guess you could say pending orders right over there, right? But what can we see is we see a prominent low right over here, right? We had some, I don't know why it went back on, no, that's a gap up. We had some, yeah, right here, equal lows. We just had a bunch of stacked lows right here, right? So this was the first one that lined up. It actually, I think it lined up, yeah, it lined up perfectly with the -2, which is also a really good sign is if you're drawing the correct points of, or if you're drawing your fib correct, a lot of times prominent high and lows are going to line up with that area because, I mean, the market moves based on, I'd say, structure and mathematical standard deviations, right? There's always going to be a sequence to something, and that's exactly what goes on with these standard deviations. When you're getting an original deviation from the original manipulation, right? That's where you're going to see possible good setups to form off of, right? So first off, we had that 12-minute low right there. Now, if I zoom in, I'm trying to make this where you can see it better right here, right? So we engineered some quote unquote liquidity right here, right? We came up, we put this low in right above that low, right? And anytime usually you see that. Now, the funny thing here is, right, Dave talks a lot about how price will put in equal lows and it will trade away and take out the high that put it in. Now, in this example, it does, right? So we put in equal lows right here, right? Quote unquote equal lows. To me, these are equal lows. I mean, they're within like, that may have been a 1.25 point range. That's pretty much equal lows, right? So price will create those and trade away from them, right? take out the high that put them in and refer back to them in later. So if we're looking at candlestick structure, we can automatically kind of see this area right here as a high that put in that low that was relative to that equal low or that previous low over on the left side, right? We could also possibly deem this as a little high, and you can see price does come up there, takes it, swipes it, comes back down, right? But the main point here, right, is like I was talking in my previous videos, those 1 minute sweeps and points of interest with a body closure back into the range are going to save you, right? Let the 12 minute tell you the narrative, let the 1 minute paint the picture, and your entry can be on the lower time frame charts, the seconds charts, whatever you're comfortable with. Ultimately, that's going to be the driving factor of this, right? So with that in mind, right? So we know that price is going to create equal lows, equal highs somewhere. It's going to trade away from them, and it's going to refer back to them in the latter amount of time, right? And you can see price comes down right here, sweeps those lows, touches the -2 standard deviation, comes into that just ever so slightly. That's all you need. That's all you need specifically for this, right? And you can see we get that 1 minute sweep right there. Price closes and sucks back up within the range right here. Okay. Now, I took my entry off of the 5-second chart, but in my opinion, the 10-second chart was just as clean. Now, the RR wasn't as high, right? So you could have either framed an entry just off of that with your stop at the low. I believe I had mine a couple ticks below just to buffer for that possible 100% mitigation, right? And ultimately, there was two targets here. My initial target was this 12-minute imbalance here, right? Like I said a minute ago, I let the 12-minute tell me the narrative, tell me where I should be targeting potential areas in price, right? And you may say, why that 12-minute imbalance? If we look on the 12-minute, if I zoom out a little bit, right, we have this big swing right here, right? This big swing. Now, I already know the 50% is going to be somewhere aligned with this, right? Then we have this 12-minute CSS candle right up here, right? That told me, I was like, okay, this is a high probable area to target, right? Because a lot of things are lining up right there, right? Now, given it was a no news Monday, I kind of chickened out a little bit, and ultimately I just went for that high right there, which is still from my entry AR, because I was on the 5-second chart, and I'm not going to bother bumping out to the 5-second chart to showing you the entry, because honestly, you don't need the 5-second chart. You can, it's quite a bit cleaner on the 10-second, right? There's going to be less false reads, and ultimately, if you're just going on a lower time frame, like for me, the entry was refined basically like I say a point and a half, right? I just basically had a limit set on the bottom of a 5-second imbalance, right? So that is that entry right there. So literally, I'm telling you, these standard deviations, if you know how to do them, I would recommend. I mean, for the most part, I think anybody that knows how to use them properly is already going to be utilizing them because they are a great confluence to add, right? But I will say, I would not implement them into any sort of your trading until you can confidently know that you have them in the right spot. And it's all about just identifying manipulation, right? Or that last up move for the big impulse move down, right? And for on the 1 minute chart, it's going to be this right here. So I toggled mine a little bit different, right? Since candlestick structure has been open to my eyes, right? Now, most of the time, people are going to toggle off the low that puts in the high, right? But in theory, candlestick structure right here, this low put in that high, right? So that's what I'm toggling that off of. And you can see, to me, that was actually quite a bit more accurate than it was previously, because if I had it in the other format, I don't think we would have hit the -2, -2.5, right? So that was that entry right there. There was two targets right there. And this also lines up with the ideology of if a lower high is failed to be closed above or below, right? The high or low becomes weak, right? So we have this low put in. Not a low. We take the low. We don't close below it. That's an important, very, very important factor, right? When that happens, when that specific signature in price happens, we know with high likelihood if it is in the correct area and spot to possibly frame a retracement / reversal off of, we know with high conviction that's going to be an easy, clean target. Now, you could even, if you really wanted to go for low hanging fruit, you could go for 50% of this little move origin right here, right? I wouldn't even call that a move origin because it's not a zone. It's just an unmitigated low time frame swing, right? So you could either do 50% of that. You could target 50% of that little range. But ultimately, terminus there would either be that high, the 12-minute imbalance, and then in reality, if you're wanting to remain, now I would not recommend this because it's tougher to gauge how deep of a mitigation you're likely going to get. And a lot of times with strong impulse moves, we'll usually get a deeper mitigation. That's kind of what we got today because there's not really much volume resting right here, right? There's not much accumulation, and price can tend to have those kind of recoveries that just do it really, really quick, which is exactly what happened right here, right? So ultimate other terminus right there would have been up at this 12-minute CSS candle right up here. Let me see if I can toggle it up here. It's 12-minute validated high right up there. So that could have been your actual terminus, and that would have gave you probably about 11.5 R right there. So like I said, standard deviations, I kind of went over that. Just spot the high or low, the most recent high or low or low or high before either a big move or it's some sort of manipulation driven event, right? I will say I would probably recommend watching a full on standard deviation video because it's going to explain it a lot more in depth than I just did. But seriously, if you want something that's going to give you a little bit more confidence in your trades, now also it can kind of prevent you from taking stuff, but at the same time, if you know what you're looking for and if you have experience in the market, that should not be an issue for you, right? So I think that wraps up that execution. I think I explained it as detailed as I wanted to. And I hope this helps. And if you have any questions, just feel free to drop them in the comment section down below. And I will gladly answer them or just reach out to me on Twitter. Or if you're in my Discord, just at me. And I'll try and get back to you as fast as possible. Keep in mind, it's almost finals for me. So I am quite busy right now. So I'm trying to manage my time well while still being a good student, quote unquote. But with that being said, I'll catch you on the next video and I'll keep posting these kind of recaps just dependent on the trades I take and just go from there. Peace.